He's joining us now, an exclusive CNBC interview, and is DocuSign CEO Dan Springer. Dan, good to see you. Thanks for joining us.
Thanks for having me.
So some extraordinary growth numbers looking backwards, and congrats on that. To what extent is that the traditional business of literally signing contracts versus some of the new areas you're trying to expand into?
Well, if you look at the fiscal year 21 growth, the year we just completed, to your point, e-signature really provided the lion's share of that growth. We grew the revenue 50% last year, and at our scale, this coming year we'll hit $2 billion in revenue. That's pretty good growth. What we saw in the pandemic, there was a need for people to get that first step into their agreement cloud, which e-signature oftentimes is, because there was just an urgency in the stay from home or work from home model. As we see going forward, we think that's shifting, and we'll see more of what we call broader DocuSign Agreement Cloud. So that's things like CLM, where we take people to that broader management of their overall agreement. So that's how we see the thing that's shaping up.
And I guess the question, Dan, everyone's wondering, I mean, clearly there is an ease of use, whether you're sitting at home or in the office, to do e-signatures versus physical signatures and scanning and returning. But when people do go back to the office, is demand for your product going to be lower?
We don't think so. When we take a look at what you referred to earlier as this digital transformation, and if we think about the digital transformation piece that DocuSign is powering, it feels like a freight train that's only going in one direction. People are not going to go back to sort of those manual processes, dealing with paper, having a much less, positive environmental impact than you would, with a digital solution like DocuSign. So the benefits of speed, the benefits of their customer having a better experience, it's pretty clear that once people have made that move, they're not going back.
So Dan, with that in mind, how do you think about how big your business can get, or as Wall Street's beloved metric, the total addressable market?
Yeah. Well, we think about that TAM, or total addressable market, in two pieces. We talk about the core e-signature business, the one that, of course, we know very well, our strong leadership position, and really what sort of brought us to this dance, at about $25 billion and growing. And if you think about it, even though we have such a dramatic market share lead, it's still very early days in that business. As I mentioned, we're only going to hit about $2 billion of revenue in this coming year. So very early innings. From a standpoint of the rest of the DocuSign Agreement Cloud, or that overall Agreement Cloud space, we see that as about the same size, so approximately another $25 billion. So we see a lot of years at that high growth ahead.
Dan, to what extent do you rely on single big customers, particularly corporate customers, for your actual revenue? I mean, I'm a user of your product quite regularly, but I'm not a paid-for subscriber, so I guess my usage relies on somebody at the other end paying your subscription fee.
And we appreciate them doing it, as you would expect. To give you a sense of magnitude, we have almost 900,000 customers around the world. And we go from the smallest company to the biggest. And we really say over time, every company should use DocuSign. However, our larger customers, the ones that we have a direct selling relationship, as opposed to ones that just come to us on the online model, represent about 85% of our revenue, even though it's a much smaller percentage of our customers. We don't have any concentration by vertical or industry, or any individual company for sure. So it is quite, diverse in terms of that need. On the other side, you described yourself, we call you a signer as opposed to a customer. We've now had 1 billion people sign with DocuSign. So that's incredibly widespread as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.